Good morning, good morning, good morning. It is Wednesday, the 17th of September. Not only are we halfway through the week, we're halfway through the month of September. Yes, it's scary. I don't know what to do either. But welcome to the Morning Blast, where myself and Michael Brown will be jump-starting your trading day with an exclusive and explosive, well, I suppose it is exclusive, no one else is doing it, market preview of today and a review of yesterday. Hopefully add a bit of value, hopefully give you a bit of a smile, etc., etc. But nothing discussed on this session, on this podcast, whatever you want to call it, is trading or investment advice or infers any kind of endorsement by myself or Michael or PIQ, yada, 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 as we are always loving to say. If you are basing your trading decisions on anything like this, then you need to give your head a wobble. But there we go. Mr. Michael Brown, how are you?
Indeed you do. Very good morning to you, Ryan. Good morning, everyone. Very happy Wednesday. Happy Fed Day as well, of course.
Oh, of
The
course,
easing
of
cycle to
course.
resume this evening in about 11 hours' time.
Of course, yes. Obviously, 20 basis point, 25 basis points, so priced in. Obviously, the usual talking heads saying, "Oh, I think there's going to be 50," and we know the reason why they do that, because if they're wrong, they'll say that they were right and the Fed was wrong. But if they were right, they can say everyone else in the world was wrong.
Do
So there's
you want to know? I'm going to talk more about the Fed later, of course,
go
but
on.
do you want to know the one sell-side institution who is calling for a 50 basis point cut tonight?
If it's Standard Chartered, I'm going to cut
Of
myself.
course it fucking is.
Oh, there we go. Oh God. I mean, this sounds like
They are just shameless at this
this is
point.
how predictable they are. You know,
I
God.
didn't realise they were that desperate for publicity, but there we go.
Oh God.
Anyway, let's crack on. I will keep the recap of yesterday relatively short this morning because obviously there's quite a lot going on
Yes.
today with that FOMC decision later on. Markets not doing especially much of interest yesterday, just sort of plodding along in the run-up to that FOMC meeting, although we did see quite a bit of broad-based dollar weakness coming in. The dollar index trading around 0.75% softer, dipping below the 97 handle. The euro trading to its best levels since 2021, north of 118, and cable looking to test 137 to the upside, but couldn't quite get there. Not entirely sure why we saw so much dollar weakness coming in yesterday. It's not exactly as if the Fed meeting is a surprise to anyone, but there we are. Nevertheless, that broadly softer dollar also pushed gold to fresh record highs, with the yellow metal briefly trading north of $3,700 an ounce for the first time, and of course trading to a new all-time high. In terms of catalysts from yesterday, we did have a few bits and bobs on the data docket. The ZEW sentiment surveys from Germany, the expectations metric better than expected at 37.3. The current situation metric worse than expected at minus 76.4. So the Germans are more pessimistic, but think things are going to get better than they thought in the future. So not sure how we square that circle. We also had the latest retail sales data out of the States yesterday. Headline sales rose by 0.6% on a month-on-month basis in August. The control group metric rising by 0.7% month-on-month. Both of those considerably above expectations, and again proving that adage that we should never bet against the US consumer. In terms of headlines from yesterday on the trade front, Treasury Secretary Scott Bessent was saying that the US and China need to meet again before the 10th of November deadline, which is when this current 90-day trade truce is due to expire. Bessent saying that the next meeting with China, didn't give a date for it, but saying that it would take place in Frankfurt. At this point, I think the geezer just wants to do a bit of a world tour. He's done Geneva, he's done London, he's done Madrid, he's now doing Germany. I'm assuming France might be next, just given that he seems to be touring Europe, but we will see what happens on that front.
Or what you could read it, the countries he misses, maybe that's like a little side eye going, here, see, I didn't come to your shitty little country.
Well, potentially. He was here yesterday, actually, meeting Rachel Reeves on the steps of Downing Street. What a meeting of minds that must have been.
The thing is, I was looking at the picture of them outside of Downing Street and outside the front door, as it were, and I was looking at Rachel Reeves and she had that "I'm just happy to be here" face,
Yeah.
and then I looked at but then I looked at him and he had the same face.
Well, it's like two of the work experience kids have been given a little bit of power, wasn't it? And we'll
Yeah,
take your photo,
exactly.
we'll take your photo in front of the door, but the policeman will ask you to leave very quickly.
When two companies don't actually want to have a meet up, so they just send the interns.
Yeah, exactly that. Sticking with trade, Reuters sources reporting yesterday, apparently the Trump administration is considering some new national security tariffs on additional imported auto parts. European automakers saw a little bit of weakness on that, but clarity on that issue very, very thin on the ground. Moving to other matters, given that I mentioned Treasury Secretary Bessent and Chancellor Reeves meeting each other, I should probably mention that they met a whole host of financial services firms yesterday: Barclays, Revolut, Coinbase, etc. Apparently, the whole host of financial firms are going to announce investments during this state visit that Trump is making at the moment. We've already heard a few of the tech announcements. Obviously, Ryan mentioned yesterday Google or Alphabet opening a new data center. Nvidia have thrown a load of cash into the UK. I believe Microsoft were talking about
I'll tell
30
you
billion
what,
quid's
if you
worth of spending yesterday.
give me 2 secs, I can quickly rattle off these because I
Go on,
think they've been
go on.
coming back to them. No
Uh,
pressure, no pressure. Right. Under the deals announced, chipmaker Nvidia said it would deploy 120,000 graphics processing units across Britain. That would be the biggest rollout in Europe to date. It's also working to deploy 60,000 Gracewell Blackwell Ultra chips. Microsoft said it would invest £22 billion in total to expand cloud and AI infrastructure, as well as its supercomputer, which will be in Loughton. Why they've chosen Loughton, I don't know, but there you
Bloody
go.
hell.
Chair and CEO of Microsoft, they said it wanted to ensure America remained trusted and reliable tech partners for Britain. Its president, Brad Smith, said relations had improved hugely since the dark days before UK's antitrust regulator dropped its opposition to Microsoft acquisition of Activision. Remember that merger that was going on for fucking decades, it felt like. Saying that Microsoft felt enormously better about the UK, so that's positive. David Hogan, Vice President of Enterprise at Nvidia, told reporters the investments would, quote, truly make the UK an AI maker, not an AI taker. Okay, thanks
Move
for that.
on. Just
Move on.
don't.
Uh, Google, they announced a £5 billion investment, including a new data centre in Waltham Cross, North London. Continued support for AI research for its DeepMind project. Cloud computing firm CoreWeave, they said its £1.5 billion backing would fund energy efficient data centres in partnership with Scottish firm Data Vita, bringing its total investment in the UK to £2.5 billion. And other firms announcing commitments, including Salesforce, Scale AI, BlackRock, Oracle, Amazon Web Services, and AI Pathfinder, with investments ranging from hundreds of millions to several £billions, which all sounds great. Two things, which I'm sure you agree. One, these things are always thrown around, and when you kind of try and audit them, maybe a decade later, you find out that bugger all's been actually spent. And two, even if it is spent, which, obviously as being true British buddies, we hope it is, has anyone told them how expensive energy is in the UK? Because I get
No.
the feeling they haven't, because that's a very intensive energy intensive stuff they're committing to, and it's very, very expensive in the UK compared to everywhere else in Europe. So, but anyway, on paper at least, good times.
Yeah, I think in keeping with the investments that have been promised into the US, it's one of those. It sounds good on paper, but give it a few years, it probably won't be anywhere near the amount that's been
Oh
promised.
no, like everything will have huge kind of like get out clauses and stuff and whatnot.
Oh, absolutely. Moving away from that, a few bits and bobs on the Fed from yesterday, just before we get to the previewing the decision today later on. The Trump administration confirming that they are going to appeal this court decision on Fed Governor Cook, very much in line with expectations. That is going to end up at the Supreme Court, although the Supreme Court are not exactly a quick institution, so that one's likely to be dragged out for some time. The Fed also confirming yesterday that Steve Moran has been sworn in as a governor. Now, you were talking earlier, Ryan, about people not wanting to be there and a bit of a side eye to people. Steve Moran's oath of office was administered by a judge of the 11th Circuit of the US Appeals Court, which, and I did the research last night because I had nothing better to do, by my reckoning, it makes Steve Moran the only governor to take office during Chair Powell's tenure that he hasn't sworn in himself. I'm sure he was busy washing his hair or, watching some paint dry. But I thought that was quite a statement from Mr. Powell.
Just, I was kind of hoping that the judge that when I heard this kind of weird appeals court judge was being used, I was kind of hoping that it might be the judge that was involved in kind of Cook's appeal or something like that. Some kind of like really kind of like 4D chess, but unfortunately I couldn't prove it.
No, I don't believe so. But also, just on that, a bit of colour around the FOMC and the way it all works. They sit in order of seniority, which means that you're going to have around the FOMC table today Steve Moran. Next to him is going to be Michael Barr, and next to Michael Barr is going to be Lisa Cook. Sod being Michael Barr sat between those two, who must absolutely hate. I mean, I'd just be pulling a sickie if I were him at this point. That must be unbearable. Anyway, moving on from that, we also heard from President Trump yesterday, a bit of a weird one. He said the Fed, I believe the Fed should be independent. I don't know whether this is Bloomy misquoting something or whether Trump has had a skinful and decided to pull a dramatic
Well,
U-turn on his prior rhetoric, but nevertheless, I thought it was worth noting. Go on.
I think it just depends on your definition of independent.
Yeah,
If independent
independent
means in
with
his
my
back
man in
pocket,
charge, yeah.
yeah, exactly.
Moving away from that, the TikTok ban, the can has been kicked down the road on that one for another 90 days. That's now not going to come into place until the 16th of December. Although the Wall Street Journal yesterday did say that there has been a sort of framework agreed on that front, involving Oracle, as we discussed yesterday. Apparently US users of TikTok are going to have to move over to another app. I don't know what TikTok is. I don't know how that's going to work. And frankly, I don't really care. So we'll move on. The US auto regulator, they have decided to open a probe into Tesla. This involves the 2021 Model Y, where apparently the door handles don't work. So, kind of important if you're in a car that you can get out of that car, particularly with
Or get
Teslas,
in
because
it.
or get in it. So we'll see how that one develops. Of course, that comes a day after Elon Musk bought a yard's worth of shares for himself. And just a couple of stories here in the UK before I hand back to you, Ryan. We have the latest inflation numbers out this morning. Headline CPI holding steady at 3.8% on a year-on-year basis in August, bang in line with market and the Bank of England's expectations. Underlying inflationary metrics did cool a little bit. Core CPI down to 3.6 from 3.8%. Services CPI down to 4.7 from 5%. Of course, the BOE continue to expect headline inflation to peak at 4% in September. We get the September inflation data on the 22nd of next month. And lastly, from me for the time being, both the FT and the City AM reporting this morning that Chancellor Rachel Reeves has been warned that the OBR are going to downgrade its estimates for
Wah,
productivity
wah,
growth here in the UK.
wah.
This is something that frankly has been coming for years. The OBR have assumed that productivity will grow at 1.1% over the medium term. You'd be lucky if it grew at 0.1%, to be honest. Apparently Rachel Reeves is going to basically say that this revision is because of the Tories' economic mismanagement. But we'll set that aside. If the rule of thumb with this is every 0.1% that you shave off that forecast leads to about 10 billion quid in terms of a deterioration of the fiscal position.
Oh,
Yeah, I know. Separately, people who have been apparently briefed on these budget preparations have been warning that the total fiscal hole could amount to, quote, tens of billions of pounds, perhaps above 30 billion. So November is just going to be fucking grim, to be honest.
oh, yeah, all up the fiscal hole.
Oh no. Oh God.
See, I can do puns too. It's just mine are quite smutty.
Well, do you want to give some news now?
Yeah, why not? Why not? Right. Some thank you for that, Mr. Michael Brown. So just some highlights of the overnight news roundup. Again, do subscribe to the Substack. Do follow Zach to get this delivered straight into your inbox. Starting with macro news. China's market rally continues. Chinese technology stocks listed in Hong Kong jumped to their highest level in almost 4 years as AI optimism fueled demand. The rally gained momentum after reports that China's Unicom Sanjianguam, I butchered that one, data center.
Excellent
I was just
pronunciation.
going to say Unicom. China's Unicom, their data center has signed contracts to deploy AI chips from Chinese firms, including Alibaba's T-Head unit. Meanwhile, China's onshore yuan rose to its highest level since November after PBOC set a stronger reference rate. We spoke about the TikTok deal. Obviously, US operations would be acquired by a consortium of Oracle, Anderson, Howitz, and Silver Lake Management. Judith Chalmers is telling me to wax off after that pronunciation. Thanks, Zach. Japan shows mixed signals. Japan bonds rose after a 20-year debt sale drew the strongest demand since 2020 as high yields attracted investors despite political uncertainty. However, Japan's exports fell for the fourth consecutive month, down 0.1% year over year, with the largest drop in US shipments in over 4 years due to Trump's tariff concerns. Moving over to Europe, European challenges mount. Germany's IW Institute expects Europe's largest economy will not grow at all in 2025. Trimmed its forecast by 0.2 basis points. There's still time for them to cut that to be negative. Where at the start of the year, when I think they were calling for a 0.5 increase, I'm pretty sure I mentioned to a few people, I even put it on Twitter, I believe, how long until this is cut to zero or negative. And it turns out it's September. European firms are expecting more shutdowns as Beijing maintains tight controls over rare earth exports despite July agreements. Moving to the UK inflation concerns persist. UK inflation held its highest level in more than 18 months, likely keeping Bank of England officials wary of further rate cuts. However, major American tech companies announced over 40 billion AI in investment, as we just spoke about.
I was going to say, we're not
Geopolitical.
doing that list again, are we?
No, definitely not. Geopolitical news. US-China tech tensions escalate. US lawmakers are questioning future ways Huawei's, which is Huawei's subsidiary, about sharing Silicon Valley buildings with NVIDIA, thrusting the chip maker into a possible Chinese espionage investigation. I think they're scared about people drilling through walls, etc. Chinese walls, in fact. Meanwhile, Wells Fargo banker previously barred from leaving China has been allowed to return to the US following diplomatic negotiations. Pacific security realignment now. Australia and Papua New Guinea agreed on a new security pact timed to PNG's 50th Independence Day anniversary, strengthening Canberra's efforts to curb China's influence in the South China Sea. Equity names, just before I hand back to you, because Michael has got a shit ton to get through. Technical term for you there. AI infrastructure boom in the UK. This is basically just going through what we've said before about Microsoft announcing a $30 billion AI infrastructure investment in the UK through
Come on,
2028.
Zach, sort it out. Don't
No, this
repeat
isn't Zach. This
yourself.
isn't Zach. I've run this through our friend Claude, and he kind of spits out the highlights.
No, I don't like Claude.
Claude's my favourite, according to Tom. It's the only one to use. Chinese tech self-reliance push. China's Unicorn built a massive data center powered by domestically developed AI chips from Alibaba and other Chinese companies. SMIC is running trials on China's first domestically produced advanced chip-making equipment, a DUV lithography machine, or whatever it's called. They're the things that make the chips, basically. This is to challenge Western AI rivals in the process of production space. Baidu, their shares jumped the most in over 2 years after upgrades, citing AI chip business growth potential. That's according to both Reuters and Bloomberg. Corporate moves and challenges. Eli Lilly's obesity pill showed meaningful weight loss in large clinical trials with far-reaching field implications. Good news for them and good news for fatties. United Airlines CEO Scott Kirby, he said that aviation industry is being held back by new aircraft shortages, side-eye Boeing. Impending fleet modernization plans are needed. Tencent, they plan to raise 1.27 billion through debt issuance to invest in artificial intelligence. Forgive me if I'm wrong, but I have a funny feeling that this Tencent's debt issuance might be in dollars rather than Chinese yuan, but I might be wrong there, but I do remember reading something like that. Global restructuring. Nissan will close design centers in both California, Sao Paulo, while scaling back London and Japan operations. Bad news for the car maker there. BHP Group will shutter an Australian coal mine run with Mitsubishi, laying off roughly 750 workers due to soft coal prices and high Queensland royalty rates. And that's it from me, because I know you've got a lot to get through. Back to you in the studio.
Very good. Thank you, Ryan. I'll get on to the FOMC momentarily, but just in the interest of good order, I will let you know what else is going on today. At 10 o'clock this morning, we have the final inflation figures from the Eurozone for August, expected unrevised at 2.1% on the headline level. And then at 1:30 this afternoon, we get the latest housing starts and building permit stats from the United States, followed at 2:45 this afternoon London time by a policy decision from the Bank of Canada, who are expected to deliver a 25 basis point rate cut, lowering their cash rate to 2.5%, despite a modest uptick in yesterday's CPI print. But the the BOC, forgive me, are also likely to signal further cuts before the end of the year, given the rapidly cooling Canadian labour market. Focus, though, more broadly is understandably and undoubtedly on the FOMC decision at 7 o'clock this evening. In terms of timings, at 7 o'clock London time, 2 o'clock this afternoon Eastern time, we will be getting the decision itself, the Fed's updated policy statement, and the quarterly summary of economic projections, including the Fed's latest dot plot. Followed by half an hour later by Fed Chair Powell's press conference at 7:30 London time, 2:30 on the East Coast of the United States. The Fed funds rate is expected to be cut by 25 basis points to a range of 4 to 4.25% in what would be the Fed's first rate cut since December of last year. Money markets fully discount a 25 basis point cut today, while pricing a very marginal, I think it's about a 4% chance of a larger 50 basis point move. That decision to deliver a 25 basis point cut, though, is unlikely to be a unanimous one. We are likely to see dovish dissent. In fact, I would say we're almost certain to see dovish dissent from new Fed Governor Steve Moran. I would imagine that that would be in favour of a larger 50 basis point cut, but to be completely honest with you, all bets are off as to how large a cut he actually decides to vote for. It's also possible that we see dovish dissent from either or both of Governors Bowman and Waller. Of course, you'll remember that both of those dissented in favour of a 25 basis point cut at the July meeting, so there's an argument to be made that they would want to effectively catch up by delivering a cut of double that size this time out. There's also the potential that we see hawkish dissent, with policymakers voting for rates to remain unchanged. While much less likely than the dovish dissent that we just covered, it is possible that either St. Louis Fed President Alberto Musalem or Kansas City Fed President Jeffrey Schmid do instead prefer to hold rates steady. In terms of the accompanying policy statement, that is likely to be broadly unchanged compared to what was issued after the July meeting, continuing with the Fed's data-dependent approach, although the opening paragraph of that statement may potentially flag some of the labour market weakness that we have seen recently. In terms of the forward guidance, there's also the potential that the Fed make a dovish tweak there, changing the line around additional adjustments to the Fed funds rate to read additional reductions to the Fed funds rate to cement what is now going to be an easing bias, as today's cut marks us a return on that journey back towards a more neutral setting of the Fed funds rate. In terms of the economic projections, expectations for GDP growth, inflation and unemployment are all likely to be much of a muchness compared to what was delivered at the June meeting, with a 4.5% peak unemployment rate expected this year and next, and both headline and core PCE back at the 2% target by the end of the forecast horizon. With it being the September meeting, we will also get our first look at how Fed officials see the economy in 2028, but to be honest, given that it's almost impossible to forecast the economy next week, those projections are not really going to be worth the paper that they're written on. What's going to be of much more interest is the updated dot plots. At the moment, the dots point to a total of 50 basis points worth of easing this year, followed by just one 25 basis point cut in 2026. The 2025 dot, that is likely to remain unchanged, implying a total of 50 basis points worth of cuts, including the one that the Fed delivered tonight. So just one more after today. The reason why that is likely is simply arithmetic. It would need 8 members to move their dot lower in order to move the median lower, and that seems like a very, very tough ask given where the economy lies at the moment. Next year's dot, though, that is likely to be revised in a dovish direction. That currently implies just one 25 basis point rate cut and is almost certain to imply either 50 or maybe even 75 basis points of cuts, and actually only needs one policy member to move their expectation lower. Whatever those dots say, it seems dubious that they are going to be as dovish as the path that the market currently prices, which is 3 rate cuts this year, followed by another 3, maybe 4 rate cuts in the first half of next year. It seems very unlikely that the dots or the statement or Powell's press conference remarks are going to live up to those expectations. Speaking of the press conference, Powell is likely to stick.
Sorry. Can I
Oh,
just
go on.
can I just make a little? Well, I'm not going to tell you what to do because obviously you're your own man. But do you know what would be really helpful for a lot of people?
Go on.
Is if Mr. Michael Brown did a little a little dot plot cheat sheet. What to look for, what kind of could happen, what can happen, where to focus your opinions on kind of what markets to be looking at in relation to that. That's what, if I was Mr. Michael Brown and as smart as him, that's what I'd be looking to do.
I will see if I'm actually out of the office most of today, but I will see what I can
Oh,
do on that front.
but I'm sure the Jam Pot and the Lamb both have decent Wi-Fi, so you'll be
I'm not
fine.
in a pub, I'm at a seminar. Where was I? Press conference. Probably going to stick broadly to the script he used at Jackson Hole, noting that policy is being adjusted due to the shifting balance of risks, most notably in terms of the labour market, and reiterating his view that tariffs are largely going to cause just a one-time shift in the price level. Powell may also repeat, and in fact probably will repeat, that the current policy stance is, quote, modestly restrictive, but he certainly isn't going to commit to an aggressive pace of easing going forwards. He's also not going to be drawn on any of the political nonsense in terms of the Fed around Governor Cook, Governor Moran, or anything else. And I think it's also unlikely that he gives any clarity on his future plans after May of 2026, when his term as Fed chair expires. Overall, given where we stand, of course, the 25 basis point cut is fully priced in. It does feel, going into the FOMC meeting later on today, that the consensus view is very much that this is going to end up as a buy the rumour, sell the news event. What I mean by that is the market has become basically carried away in terms of those dovish expectations, which will be very, very hard, if not impossible, for the Fed to live up to, thus posing potential upside risks to the dollar, downside risks to stocks and bonds over the event. But I think fundamentally, it is doubtless a noteworthy Fed meeting this evening. We are going to be getting the first cut in 9 months, and it is also going to be a resumption of the journey back to neutral that was put on pause at the start of the year, as the Fed increasingly weight their reaction function towards developments in the labour market as opposed to the inflationary backdrop. So that is, of course, going to be the main focus today. I would imagine markets end up just sort of plodding along in very tight ranges until we get to that Fed decision at 7 o'clock this evening, London time, and then things might go slightly berserk.
Wonderful. Well, thank you very much, Mr. Michael Brown. Just kind of jokes aside, obviously, it would be great if Michael could do a little dot plot cheat sheet. But in regards to what the focus should be on and what your focus should be on, obviously, as our dear friend Ryan, the other Ryan, the big little Ryan from Forex Flow mentioned just now, I did repost it. Don't get yourself stuck in a trade before Fed, because you might be locked in and it could be a bit of the Wild West. But yeah, it's pretty much all going to be on firstly the dots. And how they sit with the current line of pricing, and then it'll be the presser and how dovish Pow or how undovish Pow is. So, yeah, one to keep an eye on. It should be an exciting day ahead, but Michael Brown will be pissed up by then anyway.
I won't be, don't you worry.
Yeah, all right. Anyway, Michael, thank you so much as always, my dear friend. Listeners, thank you as always for tuning in. Thank you to Zach for the overnight news roundup. Again, do follow him, do subscribe to the Substack, etc. But from us, for now, much love. We'll see you all tomorrow.
See you will. Bye for now.